Hey, what's up investors? So today the main news is the Fed hikes interest rate 75 basis points, and more likely that also we can see a hike about 50 basic points in July. Also FOMC cuts 2022 GDP outlook and raises jobless rate estimate. So today we can see on the S&P 500 bounce after tough correction last few days, but still I have a view that we can see S&P trading a little bit lower, and my target is this support level. I think that we may see till the end of summer the S&P 500 had a level of 3060, and the Nasdaq is the same, very hard and very tough year. The IT sector is down about 30% for this year, and of course after this news I think that's the hike of Fed already priced. So I think that also we can see the Nasdaq level, the Nasdaq Index is much lower, and I see the key support level is here at 10,080. So the dramatic moves in the world's biggest bond market spell further trouble for battled US equities. Recent history shows that stocks tend to fall when the US year treasury yield hits 3%. So as seen early in May this year and then in late 2018. For example, let's add here the S&P SPY. Yes, let's check this theory. So let's move to a weekly chart. So we can see in late 18, yes, it was here. Here, yeah, it was October, November 18. We hit the yield of 10-year treasury where above 3%. So then we had a tough correction, and the S&P and all the US equities showed us a very good correction at the end of 2020. So the treasuries extended their worst rout in decades, with 2-year yields hitting a level last seen in 2007. Traders remained cautious ahead of the US central bank decision, and have now almost fully priced in a 65 basic point hike. And now we know that it's the biggest since 1994. In just 3 years, 2-year rates have increased more than 60 basic points, the most since 1887. So closely watch part of the US curve inverted briefly, signaling concerns that restrictive policy may take a bigger toll on the economy. And the DXY, the dollar index, today is down less than percent, but we can see still that it's traded at the top of this range. So still after the hike, the US dollar is one of the most stable currencies in the world. And the euro dollar pair is, as I see, most probably going to a parity. So it's a few percent to a parity. But of course, after this series of hike, I can see that the ratio of euro to dollar, it can be the lower border here of this decreasing channel. And Bitcoin, it's also one asset that now is experiencing very tough year. We can see that year to date performance is down more than 50%. What I can say, look, I think that's for me it's not a defensive asset, the Bitcoin, all the cryptocurrency. and it's very high correlated with the S&P. So from its high level we now down more than 70%. We have broke now the support level. We had at 30,000. So now most probably we can also go a little bit down, and the nearest support level, also here the horizontal volumes, it can be here. Let's add this level. So I think it's there is a probability that we can see Bitcoin in the future weeks at a level of 10,000. So it's probable. And why we have so much problems last weeks? Of course, the inflation. We can see that the core inflation CPI in the US year to year is now 8.6%. It's a lot. It's the highest level actually. Let me check. It's the highest level since 1981, so it's very high inflation. Today's hike by the Fed also signaling us and showing that, of course, it's the key target to decrease the inflation. I hope the Fed could do something with it and could handle it. So we can see, but still now it's the summer season. All people in America used traveling a lot at the country. So I'm not sure that now in July and August we can see significant decrease in the inflation. So we will see, of course, by the data in future weeks, but still it's a good issue for everybody to handle this super inflation. There are some stocks, very interesting stocks. As for me now, we can see that Google P ratio is now below 20. Its historical P ratio now is 20. So now it's trading at a level of 2012. So as we can see, it's not expensive. Also Netflix, also one top stocks. Now I'm holding a position in my portfolio of this stock. Also 60 PE is also cheap. And the Facebook, check this out, only 12 PE ratio and PS ratio, price per share, is below 4. But the Facebook, it's a top stock for me. Let's check its net margin is 26, and this company each quarter its revenue is more than $20 billion. And of course for me top stock, I'm not sure that it deserved performance year to date about 50%. So now I think it's a nice price to buy, nice level to buy. And by their side, the momentum, we can see it's a monthly chart that it's really very low. So this, from this point of view, in the weekly chart is even lower. So we can now are in the lower border of this indicator. So usually when we get here, when they're in the lower border, it's a good signal to buy. So for me, the Fangman stocks, Facebook, Apple, Google, I'm thinking it's very attractive prices for buying. And now let's have a look on this picture. We can see that the S&P 500 now in a bear market, following a plunge of over more than 20% from a record. Hedge funds tracked by Goldman Sachs offloaded US equities for a 7th straight day Monday, with the dollar amount of selling over the last two sessions exploding to levels not seen since the firm's prime broker began tracking the data in April 2008. Actually, now it's the first bear market for the S&P 500 over the past 2 decades. So we can see that last financial crisis in 2002, 2008, it took more than 1,000 trading days to claw back to the losses. So I'm not sure that the bounce back will quick. So now current level of S&P 500. It can be lower, so 5,515, even 480. I'm not sure that we can see even in this year, and of course we're ahead of recession. So we should focus on the US stocks more closely. So thank you for watching. If you like this video, press the like button and subscribe onto my channel. See you in the next time. Bye.